Johnny, we are live. Welcome everyone to another Traders Community podcast right here on Fed Day. And as Tom Brady would say, let's effing go. LFG. So why do we say that? Well, it's what all happened. That was the highlight of the Powell conference. And pretty well from there, the stock market, after selling off initially, started to rally. So let's get started here. Remember, this isn't financial advice. It's just real market insight from real traders taking the time to go over the day's markets and trade so you improve your trading and risk exposure. If you like what we do, subscribe to the channel, click the like button, and smash the bell. Now, as Brady would say, let's get into it. LFG, right? So, talking about traders, we got the glorious Madavi here, and the Chinese stock trading wizard, Johnny, all the way down from the metaverse, Meta Johnny. So, welcome, guys. A couple of crazy days, and doing those outside days that we talked about through the charts. And really, it's really a FOMO market. It's still very much a bull market mentality. People that have never seen bear markets, any chance taken to buy. We saw overnight big gap ups for those Chinese stocks and Hong Kong stocks that have been smashed because Chinese economy is a mess with Evergrande, COVID, and of course the delisting thing. So it gives you an idea of the manic thing. And of course the short covering we talked about and fueled about technically. And then we had Powell's statement. So let's get into it. Where we are right now, oil's 95.34, S&P massive run, 43.71 cash, the little rusty 2039, natty gas 475, 1400 right on the button there, Nasdaq, and volatility came off hard from 36 to 27 on the VIX. And remember, that's one of the real good indicators for buying and selling, letting you know where the market is. So if you want to just look at for a second, take a picture of that oil and gas. That's your biggest part of inflation. Whilst oil is off a high of almost $130 on WTI, it's still $95. Natural gas is still $4.75. And as long as you don't eat, sleep, drive, use any plastic, what else? You are fine. And if you don't get sick, that's pretty well the gist of the financial markets. It's that sugar high that comes from it. So let's start off with the SPOOs. That's pretty well gone to plan. Yesterday we mentioned that there was a very good chance, given you had that short covering, particularly on Nasdaq from that false break and all the dribblers out there going on about Death Stars and all this sort of thing. Just keep it, trade what's in front of you, use logic. You know the market got really short. We walked through covering all those Chinese stocks were short just 1 day or 1 day and a half ago. And you can see the reason why, risk reward, right? And old-fashioned saying, a crowded trade, avoid crowded trades. So we closed right on, this is a weekly, right on that channel and underneath the tanking, right? Like, it's amazing, isn't it? It's like a magnet. If we look at daily, you can see it even better. We've come up to retest the breakdown, massive confluence here, right? You can see where it's done. And at the end of the day, as far as hedging goes, you were able to buy some cheap puts on indexes, well, cheap relative. VIX is still relatively high, 25, 26, coming down even further after market. It shows you how quickly fear goes away. And remember, a lot of these massive puts are hedging people that haven't got out of their length. Also, it is a massive put gamma coming up on Friday with quadruple witching And the last thing the guys on the other side, which is generally going to be banks, want is it to settle down here. So we talked about that also. So it's all pretty logical stuff if you want it to be. On the 240, you can see there that off that double bottom we talked about yesterday, we gave that possible target. We almost got to it, but we did at least get right to 4H. So we, as you know, we took our profit, re-got into it. This wick was the number and actually filled the gap. So a good day all round on SPOOs. We came in with those long calls that we got cheap. Obviously, that was a really nice reward there. Yes, we could have kept Apple calls overnight, but to us, that wasn't worth the risk. And we didn't know what was going to happen in China, which kind of got it going. Anyway, let's, without further ado, let's bring on the great man himself who called this up on the Nasdaq. How you doing there, Madav?
Yep.
So here's your market to the button, my friend. Nice work.
Oh, yeah. Well, today was, right before in the morning, I just really stayed long. And right before the Fed came out, I shorted the NQs. And then I went long the S&Ps. So I did a pair trade thinking that I could get both sides of it, which it tanked, then rallied. And then towards the end of the day, I don't know, I should have gone, I didn't think this bull market was going to be this strong. Towards the end, I kind of faded it, and, that was not a good trade. But besides that, there's not much else to do today.
No, it's pretty straight. And what our checkmate always reminds us of is at 10 minutes to go, it's not always a certainty, but in a rampant bear or bull market, that hedge fund rebalancing really gives it another, and it gave it like another 15 handles or something today on the SPOOs, which I guess was about 50 on Nasdaq. And the same thing happened yesterday, and the same thing happens elsewhere. So just remember that. And I think Wifey talks about that, our friend over there on Twitter, just how the real big players basically just do the start and the end of the day with size, And you see that those from the energy world, very familiar with that in natural gas and oil. So retail, you need to keep an eye on those sort of things, or just be aware of them. And particularly if you're using some follower system or not fully understanding a lot of things like, but word escapes me right now, the different value systems, because they do get distorted from that. So let's look at, so that was the weekly. Let's look at the daily, or the hourly, sorry, and that's what we're talking about right there. So this is Fed. He comes out as expected, as we said. He raises a quarter. That was what we expected. It sells off. It was getting sold off. And then he came out and said, I don't think there's going to be a recession. And that pretty well got it going. And as you can see, he does a good job in some respects, but I mean, and by their admission, they were way behind it, but they still keep pushing that thing. Oh, we got it. We'll just do it live. The reality is PPI was 10% yesterday. That's the real world, right? So that's why we get these wipes and stuff like that. So anyway, we moved up very nicely, and you can see these false breaks. Now, you can go on about a lot of technicals, but at the end of the day, it's order flow going into support. You can see it went right to it. So you need to watch that. You need to be very fast and be trading them if you're trading it. Don't be jumping around. You got to watch that market. What's right in front of you. I didn't trade. I think any of us traded Rusty today, but we did make a bit of money on some of these shorter stocks, dribblers, if you like. Remember, you sell the dribblers till they run out of time. And then you cover them just like we did with the Chinese stocks, like we do a lot of the favorite ones we just love to, well, I shouldn't say love, but we sell, we short and take profit on them. Because you wait, it's all about risk reward, right? When they pump up, the dribblers aren't going to admit they're wrong, so they keep averaging. Well, what they tend to do is buy them on high days rather than down days. So it's simple human psychology there, really. So we were able to do with them, and the reason I mention that is we're looking at the Russell, and that sums it up. And they all had that same false break down the bottom that we saw on Nasdaq. So there's that fear of missing out takes a hold, but look how it's trading cyclically. Just up and down. So don't buy here, right? So use your technicals and all that. Avoid your dribblers, and all that sort of thing, the Johnny know-it-alls. We can't stress that enough because, A, they're never wrong. Are they ever wrong, Madavi?
No. They're awesome.
But they're going to lead you astray, right? So trade what you're comfortable with and understand. So oil, not a lot to do today because of the Fed, which is unusual. Well, let me go to energy because it was an EIA day. And so remember, Wednesdays in a normal week are oil, Thursdays are natural gas. So oil is building like we showed yesterday on the 50. You can see this little pennant it's building. But these are big points. These are $4 or $5. It's not as thin as it was up here. It's still thin enough. We're coming to rollovers. Remember, we had the OPEC report yesterday and stuff like that. And you can see on the weekly, it needs to regather this cage in here, which is up at 96.30 by the end of the week. It's not far away, but keep that in mind. On natural gas, up a little bit, just over the cage. It's still in that pennant. Real simple stuff, all this, if you want it to be. Where's our natural gas daily? Oh, there it is. And you can see it even more so there, right? So don't force a trade. And again, there's some really good energy players, and you see most of them take part in our Around the Barrel on Wednesdays and the Vortex on Thursday. So do yourself a favor, check them out. Lots of good people. Subscribe. The other thing we want to talk about was gold. Which one's our gold? Here we go. So gold has been trading with a lot of this fear and greed. What hurts gold and oil is the dribblers discover them here, and they get caught on them, average, and it does these kind of moves, right? They're not buying here. They're buying here. Same, just think of all the stocks they bought. Buying stocks here, selling them here. So the same action's going on. So there's a big fall today, about $60 from here to here. So we're just watching that develop. And so it's a lot different to copper. Remember, copper did that total fail here. But look what it did. Copper triggered the stops and it's now back inside that grid, right? So, good support there. Crypto, we saw a big pump. Mullen's going back up again. So Mullen's one that we like to trade a little bit in the after hours.
Yeah, for long.
Well, we'll look at that one sec. So here we have a nice big run by Bitcoin today. Interesting comment out of who was that earlier? I'm trying to think who it was. Give me 1 second, I'll find it. Yeah, I think it was over at if let me find it. Yeah, so it was Gundlach. I thought it was him. Came out and said he's going to be in Bitcoin over gold until the next FOMC meeting. So take that as you will. Big days on all the stocks there. Let's have a quick look at the stocks we played. And you heard Madavi mention Mullen. So here we go. So firstly, let's look at the Chinese stocks real quick. So here's JD and this is why we covered. Our main position was in IQ. We had a small position here from the 70s. We covered this one by calls actually, rather than buy it. It would have been more effective just covering the stock. But we had calls bigger than the delta, because the delta here is like 50, so it's 100% delta. And because VIX went up so much for this stock, we actually did better by owning options. But the reason we took it is you just don't know what's going to happen. So a lot of, like I said, a lot of these options that expire are worthless. Now, an IQ, it's a $5. Well, it was when we shorted it. It was $5.60, I think, $5.56. So we covered all that by buying the stock back yesterday. That was a great cover, but we had size on that, and it was small. What's the upside when you're already gone from 5.62? You can see why we do it, and we tell you all these things. These ones we told you before they happen, actually. But we're fully transparent. That's the word I'm looking for. But you can see why we're doing it. Good trading tips. In other words, we aren't just hoping. Like, we short that Palantir all the time on rallies and other dribble specials like that. But you don't stick with it because you know it's on the other side, right? The IQ is another a bit different because there's a takeover potential, given they're known as the Netflix of China, Chinese Netflix. That was so that affects, so they have a ton of content. So someone's going to want them if they keep dribbling down. Lanier was one after hours. That was really the only earnings play, and then we'll go on to Mullen. So Lanier had a good strong numbers. So you did this one, Madavi. I didn't do it. I should have, but so on this, do you want to talk us through Lanier real quick? You still there, boss? So anyway, Lanier. Oh, there you are.
Came out, and it ran up basically, and this thing always runs up like that. I think it missed like earnings, but the revenues were higher. So I took a poke at it, and it's very thin. It doesn't trade very well. I did it between 90. I did the first one, then I think I did it at like 90.70, and then 91.50, and then it dropped back down, and I covered.
Yeah, there's a few points in it, which is good. So this is also,
it doesn't trade well.
No, I remember trading a few earnings ago and got stuck in it for a few days. So that's why I didn't bother with it. Similar play, actually. I shorted it. Then all of a sudden it just dumps, but because it's affected by housing and all that, I guess. Okay, let's look at Mullen. This is a little one that we've traded quite a few times. We'll put it in here where IQ is. So this is a little stock that was a SPAC, and there's a couple of really good traders we know that trade this around. And so it piqued my interest up. We'll look at it on the chart, and I'll show you where a few days, maybe a couple of weeks ago. But I remembered it from back in the day. It was one of those, it's a bit of a dribbler special, this one. But what happens with some of these, they get taken over by good operators, for want of a better word. So we actually got in this. This is at the start of end of February, around 56 with size, 58, I think, and got out of it a little bit early, around 150. Then, and I think we've walked everyone through this trade because of different things. Hedge funds were mega short it. It was an EV play. They have some IP that other firms want, etc. Anyway, it comes up. This dump was because they did a secondary. So here we actually got out of the long here, right? And remember, I got out early, and then it went over $2, and then they do the secondary aftermarket, and you can go back and check. On the YouTube, we actually probably went through this. I remember. And then you couldn't short it that night. The next morning you could short it. Remember that? So we obviously smashed it. It dribbled down. We ignored it. Didn't trade it. And then it started to get interest again. And Mado made a good point. Because of the secondary, they want to get it back up there to get the best price, right? So by here, the market, looking at the volume, you can see a lot of shorts went back on. We bought it again here. 109, I think. Our buddies bought it here, of course, 60, 70, 80 cents. But we tend to only play these when we're not busy on all the other stuff or when we get a heads up. So anyway, we played that and we've been playing it, all these little moves. Now I'll bring it into a 30. We've just been playing it up and down 10 cents for what, 3 or 4 days now?
Yeah.
And
Nate likes to go short or go long.
Well, I did it today. We just did it after hours because something to do while earnings. It sounds terrible, but hey. Yeah, so I did a little long. Yeah, I do like the short side. I guess that's because of the commodity trading background. Things go down. Things go up by the stairs and down by the escalator. That's kind of the Australian, Estonian mindset. The day with the Irish grandmother. Let's blame all my ancestors. Do you like that? So this one, we didn't trade till after the market. So when's the market? When do we close here, right? So I just noticed it going up. Johnny gave me a heads up on EV. I go, I know an EV. So we watched the volume on Mullen. We got in here, I think around 175. And then, hang on. Or was it here? This is a 30-second chart. So it was probably here. Actually, here's where we bought it. 175. Sold it at 185. Actually shorted it and got a fair bit of this. And then I took a break from that there, actually getting ready for this podcast. That's what this podcast costs us, buddy. Look at this. So you did that length, but I didn't do that long. But I got hit pretty hard down here at 175. Is that here? It's got to be here. And then you brought it up. So here we are at 188. So you can see this. We're not talking. This is churning on a big volume. For 10, 20 cents fairly regularly. So there's those other big moves. Huh?
83, 84.
Yeah, so you can buy, and so this is a stock that people trade 10, 20,000 a time. You know, you see, obviously people do a lot more, but if you're looking for that sort of trade, if you know your maths, see how nicely it works off maths, if you know order flow, there's a lot of fake stuff goes on there. It's a real good... These sort of stocks, when they're running, a lot of the time that you don't want to avoid them, but you'll learn a lot of good habits out of there that you can transpose to stocks like the Apples and all that, are all pure market makers, really good traders. But if you can understand Apple, the S&P becomes very easy. What was the main reason I bought stocks this afternoon? And yesterday it was all Apple, right? So... because I was watching it, okay. These blokes know what they're doing, plus it's the real orders. So on here, it's certainly not Apple, but you got guys that they go through cycles, that they find these good stocks. Now, you got all your dribblers, for sure, that are obviously if you're selling here, someone's buying them off you, right? So this is a stock that was, I don't know, what, 12, 20 bucks? What was it? I guess we should do it. It was way up there. Now, so Palantir's another one. It's around 11, 12 bucks. So we trade up and down for 50 cents. Same sort of thing, right? This is just one that, I don't know, why did we start? Who was it who told us? But I don't know how I got dragged into this. But this was was it this high? Look at this, mate. I didn't realise it was that. So, this must have done reverses. So it was a SPAC, which is really a fancy word of a reverse, right? This was $600. But since we've known it, I want to say it was $50 or something like that. Maybe not. So when did we start trading it? So it probably became a SPAC here. This is Mullen. It looks like it got over 20. Yeah. So anyway, that's your history of those. And there'll be other stocks like this. Look at look at this volume. No volume, it's all come in the last 2 months. That's what attracted us to it. We don't go where there's no volume. You got to always look at the downside. Like, why did I get out of those Asian stocks 2 days ago? Luckily, really. But you don't know what's on the other side, and you know all of a sudden your edge. You're always trying to have an edge on stuff. Okay, so our last thing let's just look at interest rates, given it was a Fed day. So the 2-year, and so they did raise rates. We know that. It was expected, and they're going to keep raising rates unless some miracle happens where commodities collapse or something, or the world goes so bad. It's not a good thing, I wouldn't think, on the top side there. Potentially, right? So if we look at the 2-year is your best Fed. It's called your Fed funds, right? So what it did today was that the yield. So this is the yield higher, bond lower. It did finish off its lows, the bonds, yields off their highs, and under 2%. You can see what it did. This is a 4-hour. Actually, should we do a shorter one? So you can see what we're talking about. So the Fed comes out. They've been and gone. And so a lot of this is buy the rumor, sell the fact. It gives you perfect, like 2%. It touched on it. See that? That was plus 1/8. It came down. Just technicals work wherever, man. And then you can see how it closed off. Real clinical. You can see what's going on, and you work it off that. Because remember, the market had already basically raised rates for the Fed, right? Very simple concept, but that's what you want to grasp. On the 10-year, which, as you know, is the benchmark, look at it. This is 5 minutes. So you can see exactly. Is that really 5 minutes? Doesn't seem like 5 minutes. No, I didn't think so. Very simple concept, but that's what you want to. So if you look at this is a 10-year, and you look at each country's 10-year, the Bund for Germany, etc., the gilt for England. Look what this did today. Here's the Fed announcement. Look what happened, man. Rates go flying. So some of the best traders, I've been fortunate enough to be had a good trading career. Volatile at times, controversial at times, but with some of the best bond and currency traders at walk. And guess what? They're accumulating here. This is where they're letting it go, right? And there's other stuff that goes out the curve, etc. But so, buy the rumors, sell the fact. How many times do you say that, Madab? You remind people every day, right? So look at this. And remember, these are big points. Bond points are big points. So keep an eye on that trade. You can see head and shoulders. If it breaks, see, they just get really big. But you know, overall, this means bonds going off. The reason it's weak is because people want alternative investments, i.e. they're worried about stocks or whatever it may be. So bonds are a safe haven relative. Depends on the country, etc. But that's theory. It's kind of ironic when you think how much debt gets pumped out every day. But anyway, that's pretty well all from us. Tomorrow's Thursday, so we get your natural gas number. Let's go back to our front page as we finish up. So tomorrow we got natural gas. We've had so far retail sales this week. In the last week and a half, you've had CPI, PPI, multiple countries, IP, I think we got tomorrow. You've had your oil and gas, and you've got all the geopolitical stuff. You got a real smorgasbord of risk and unforeseen possible bifurcations, which Cautious Investor does a good little rundown in this weekly. You should do yourself a favour, read it. That's why we take profits, right? And every now and then, you'll get lucky and you'll get one of these bigger moves. But just kind of churn away. And as I mentioned earlier, we chunked a few of those smaller cap stocks we had because they became losers. Yes, we could have held them and obviously been up today on some of them, but not necessarily all. So you just don't know. So expect the unexpected. Anything else? What would Tom Brady say?
Be always doing it.
And so I'll let Madabi tell you why that was relevant today, because he was listening live to the press conference, when
Well,
that
yeah.
came out.
So the question was to Powell that now Tom Brady's back, so I guess our employment number's going to be good because he's back in the workforce. So that's going to boost it up. Yeah. Tom is the man. I mean, just look at Tampa's GDP. I think that'll revise it because up higher because of Brady.
Right. And so, but the funny thing was two things. It gives you an idea of the market that a serious financial reporter asked that. It's a bit of fun, so it's harmless. And Tom Brady is a living legend. So, but Powell obviously knew who he was, said something back. But sometimes you wonder the seriousness of what's going on is just not grasped by everyone. I'm sure as far as, I can't say I'm sure, but as far as administration.
I would encourage people who retired early to come back to work now. Tom did.
Right. And, yeah, he's got a little bit of advantage, like one of the greatest sportsmen ever looked, best looking guys, supermodel wife.
I think it tells me that most guys his age, even if they wanted to come back and play, I don't think they can.
Yeah. I couldn't imagine playing rugby league again at Buddy. What is he, 43?
45.
So it's a tough sport, but, to me, he's like, I mean, Madavi and I have a high rating on it. Madavi actually knows the bloke back from his California days, but when you see someone with such a high drive and not the natural ability, obviously he had some natural ability, but you know what I mean, the outstanding superstar. He still went in the draft, that this wasn't the first draft, but to battle along and put up with so much hate. So we see that all the time as traders. If you're good, there's a lot of hate, right? And actually I mentioned we just haven't had a break with the oil and all that, but we're going to shift more towards interviewing successful people that have been through adversity. Not saying we're going to get Tom Brady on, but people particularly from sports or different walks of life, not just traders. But yeah, we will have some guys that have been in the fire pits in trading and been through it all. We've been through it ourselves. So we'll start to share that because I think that's the most important thing. And you've probably seen the stuff we're talking about comes to fruit. So the first bits have a grounding in risk and discipline and understanding kind of what Nova Wave's about, just maths and probability, right? And avoiding the noise. And that's why we probably ad nauseum going about the dribblers, etc. Just be very, very bloody wary. So anyway, that's where it came from.
Now, a bad trade, I'll tell you what a worse trade is, okay? Is the guy the day before Tom Brady announced he's coming back, buying what he was thinking was the last football touchdown that Brady ever threw. Now, that's a bad trade.
Yeah, and maybe, I mean,
He paid like $600,000 for that.
So what if Tom Brady went, should I do this?
I mean, I think Brady waited for that guy to sell that ball, and he came on next day, you don't got my last one.
It reminds me, during one of those 1980, or was it that far back? 2000, 1980s, 40 years ago. So it got to be 2000. Yeah, 1980s we're in diapers, but in 2000,
it was a good year. I mean, gold was at almost $1,000. You know,
true. But I'm trying to think of that when someone bought Maguire's baseball, and then he got the same sort of thing. Remember, he broke the record. Then he got done for PED.
The guy played for Cardinals.
Yeah.
Maguire one.
Yeah.
I know him. He used to be in Huntington a lot. Yeah, but he retired in the 90s. Sammy Sosa.
Yeah. Is that the 90s?
It was him going for the home run record. You remember?
Yeah. So someone did the same thing with the ball, and then the other thing, it was, I think the guy who did Spawn comics or something. Is it Spawn? He bought that ball, like a couple of mil, right? I don't know. My memories get a bit blurry.
But this is one day, you know. That guy bought the thing. Yeah, one day. Next day, the thing. There goes the value.
Yeah, he's seen some of my stock trades, I think. He's like, I go, mate, I know what you're feeling.
I hear you. But usually items like that don't lose that kind of value. That's going to go down to records in a day.
I wonder, well, it's still going to have some bit on it. You know what? It probably becomes a bit of folklore.
It's going to be Tom's Brady last throwing touchdowns, first retirement.
Yeah, that's retirement number 1. So retirement number 6, we'll see what happens.
By the time he's done, that might be like, there might be 300 other balls after that.
It wouldn't surprise me. Okay, mate. Well, a good day had by all. We can see the market's pulled back a little bit from those.
Yeah, I'm sure.
It's like 20 handles. So remember, as far as futures though, I won't do anything till early in the morning. But I did pick up some cheap puts on the spiders and on Apple as a safety valve with about 2 weeks expiration. So that's the other thing. Buy puts when you can, not when you have to. It's always a good thing. It takes off a lot of that risk. And actually, you bought those VIX calls too. I remember that. So those are
20 calls. They're not looking so good right now. But tomorrow, I think it's going to be a different day, guys. Just wait.
Well, yes.
Wait. Tomorrow's going to be what a difference a day makes.
Yeah. So basically, it breaks that channel we went through and goes flying up, or it stays in it and comes down and touches the bottom of it. So replicate those, and so just I've had a few DMs, but these are Sierra charts. We think they're unbelievable value, but it's got all the stuff we use as well. So do yourself a favor. Anyway, on that note, it's good night from him and good night from me. And Johnny was here, but I think he's tied up.
He went to the meta world.
He's in the meta world, yeah. He's counting his Bitcoins, just like Tom Brady.
Yeah.
So have a good one. If you like us, subscribe us, share us. Got any questions, just hit us up. And I hope